Hello, everybody. This is Victor here from Trend Following Trading for Beginners. And in today's episode, I want to talk about the science of hitting from Ted Williams and how it is applicable to trading. Coming up next. Hi guys. Last week, basically I was looking for daily affirmation video on YouTube, which I more or less do on a weekly basis. And I came to a very short video about Warren Buffett. It's a speech on Warren Buffett given in Georgetown University, and I would like to share with you. And I think it's very worth it and worthwhile to listen to this, and then we will talk.
The most important thing is to be able to define which ones you can come to an intelligent decision on and which ones are beyond your capacity to evaluate. You don't have to be right about thousands and thousands and thousands of companies. You only have to be right about a couple. I met Bill Gates on July 5th, 1991. We were out in Seattle, and Bill said, "You've got to have a computer." And I said, "Why?" And he said, "You can do your income tax on it." I said, "I don't have any income. Berkshire doesn't pay a dividend." He said, "Well, you can keep track of your portfolio." And I said, "I only have one stock." I said, and he says, "It's going to change everything." And I said, "Well, will it change whether people chew gum?" And he said, "Well, probably not." And I said, "Well, will it change what kind of gum they chew?" And not. And I said, "Well, then I'll stick to chewing gum and you stick to computers." I don't have to understand all kinds of business. There's all kinds of business I don't understand, but there's thousands of opportunities there. I did understand the Bank of America, and I'll be able. I'm able to do that. I'm able to understand some given percentage. But Ted Williams wrote a book called The Science of Hitting, and in The Science of Hitting, he's got a diagram, shows him at the plate. And he's got the strike zone divided into 77 squares, each the size of a baseball. And he says, if I only swing at pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2 or so on, even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and, you name it, any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game. And it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. 4 or 5 will probably do it over time. So I don't worry too much about the things I don't understand. If you understand some of these businesses that are coming along and can spot things on, if you can spot on Amazon, for example, it's a tremendous accomplishment what Jeff Bezos has done. And I tip my hat to him. He's a wonderful businessman. He's a good guy, too. But could I have anticipated that he would be the success and 10 others wouldn't be? I'm not good enough to do that. But fortunately, I don't have to. I don't have to form an opinion on Amazon. And I did form an opinion on the Bank of America, and I formed an opinion on Coca-Cola. Coca-Cola's been around since 1886. There's 1.8 billion 8-ounce servings of Coca-Cola products sold every day. Now, if you take 1 penny and get 1 penny extra, that's $18 million a day. And 18 million times 365 is 7 billion, 3 less 730 billion, or $6,570,000,000. So annually, $6,570,000,000 from one penny. Do you think Coca-Cola is worth a penny more than Joe's Cola? I think so. So, and I've got about 127 years of history that would indicate it. So those are the kind of decisions I like to make. And you may have an entirely different field of expertise than I would have, and probably much more up to date in terms of the kind of businesses that we're seeing evolve. And you can get very rich if you just understand a few of them and understand their future.
Okay, before we start, I have a confession to make. I don't play baseball. I have no understanding of baseball, but from what Warren Buffett was saying, and in the video which I included in this podcast, basically I just go and dig up what this Science of Hitting book is from Ted Williams, and I found fascinating reading and very applicable to trading, which I'm going to share with you, which also what Warren Buffett talks about. And I will go to, in this podcast and the description, I will include the original video link on YouTube that's included in this podcast on what Warren was saying, plus the PDF I found free online so that you can download the Science of Hitting book from Ted Williams yourself. Basically, this Science of Hitting book, if you change anything, about hitting, maybe you can say science of trading, is so applicable to trading overall. I mean, like I said, I don't play baseball. I have no understanding of it, and the first time I read about baseball stuff is from Michael Govell's book, okay, the trend following book, but then this book on Ted Williams, what it basically is his own book written that from his experience, how he think, how he should hit the ball, his experience of how to get hit the ball the best way, and how he think you should learn about the science of hitting the baseball and how people can train to do it, and so forth. It's quite details. It's very short, about 75-80 pages, but it's full of a lot of pictures and stuff. And one of the things that Warren Buffett talks about is this page that Ted is standing with his baseball clothes on, his bat, and then beside there's a panel of 77 little baseballs. And in the middle of it is basically the red circles, is those 0.4 average and things like that. So those are the red, which is in red color, and those are his strength. Okay, Ted Williams' own strength, and he say this is how best for me, that kind of thing, and also written down on different averages and stuff on different corner of the box out of those 77 little balls. And basically he talks about in his book how he concentrate on those confidence box, with the one with the red color, because those are the things that he feel comfortable with, and those are the things that he can hit hard and get a good connection between the ball and then his bat, and can produce a lot of good home runs and stuff. And that is his saying. And then the book talks about a lot of things like practicing, smart thinking, and so forth, which I'm going through with you. And basically just goes what Warren Buffett is referring on. I mean, first of all, Warren's talking about circle of competence. And this basically is more or less know your strength. And like I said, with Ted Williams, little card with all the baseball on, the 77 baseball on, basically Ted Williams is saying, from his own research, own experience, he writes things down in his experimentation and observation. The red balls in the 77 ball panel thing is his circle of competence. There's others, and he rated them as well, and he found those ones are not as profitable and don't seem to get a good result. So he basically save his strength and keep those bits that he do best with. And basically, if he determine his strength, the best point, his best hit possible, and basically drawing a diagram to remind himself, kind of thing, and let other people know about it. So teach other people as well. So and that is his circle of competence. And like Warren Buffett said, he can think of, he can relate to Bank of America and Coca-Cola stock and the company better than relating to Amazon. And he doesn't have to make a decision on Amazon because he don't seems to maybe not understanding it, or it's not his cup of tea mainly. But this is main thing is he know his strengths and weaknesses. And this diagram from Ted Williams is very good. It's good. It's an eye opener for people. A lot of traders, new traders especially, they don't know which style is best for them, which particular bit of the style or the method that they excels at. And this takes years to do that. And same thing with Ted Williams and same thing with Warren Buffett. But they write things down. And then they basically find a circle of competence and they stick with it. So first things is, of course, circle of competence that come to my mind, and something that I think is very applicable to any traders in any style. You need to find something that you're comfortable with. And the only way to do that is basically writing things down and track your trade and then see which one got a high percentage, which one you feel better at. It's also the emotional side as well I talk about in the previous couple of episodes. And then you find out which one you're good at and stick with it. Rather than jumping up and down and going everywhere, like I said before, system jumping, method jumping, hopping around like a grasshopper. But a lot of times, the best things that you have is actually in your hand right in front of your nose, and you missed it. All these people running around looking for a holy grail, missing something very simple, something that's staring in the face, something that is within their competence, within their strength, within what they're good at. But a lot of people prefer complexity, prefer to dig, maybe to find, to chase, especially man, rather than, he is the information, read about it and get on with it and practice. So I think this is one big point for all new traders is find your competence, find your level of strength, and stick with it, okay? And the other thing, the Ted Williams book, which also talks about, which is not in the video, is something very good. Ted Williams talks about we all come in different sizes, human beings, and how we swing the ball, how the size of our hand, the way we stand, and even our eyesight, everything all got something to do with it, and how you take the balls and so forth. And we all have our own different unique style, maybe due to our body, our religion, the way we brought up. We want to mimic our heroes and stuff, And it's the same thing for trading. There's so many trading styles out there. Every bit seems to be correct, but a lot of them seems to contradict. Loads of indicators. And I just thought there's just a lot of different things out there that you can quite easily get confused very, very easily and very quickly. You don't know who you are and find a style that fit you, and you have to able to repeat. So just like swinging the bat, so to speak, you need to find a way, a style, or particular swing pattern, that fit your style, fit who you are. Okay, rather than buying a book or buying a system and then say, okay, I just follow it without checking and testing it actually fit your personality, which I talked about quite a lot. But nobody knows about this until much later on. So when you start off with your journey, be mindful all these different styles out there. They might all looks correct, but it might not fit you one way or another, because we're all different. We all come in different sizes. Our own, how we all brought up, our experience with money, and so forth, make it quite different as well. So don't try to have this thinking of one size fit all kind of idea. No, you don't. And you need to know, you are different. We're all different. So don't try to say, that's only this way or that way, that's it. There's a lot of people out there just tell you, to learn this and that's it. Concentrate on this and don't do anything else. What I would say is, you can do that at the start, but later on, you might make it your own. and then you have to have your swing and your own style. Don't listen to other people on this one, because at the end of the day, it's you against the world in trading. You must be able to trade that is comfortable with you, and hopefully that system with your back test is profitable, have a positive edge, and you have to stick with it. If it's not you, or not, you find it not easy to use, or not something that you can apply very easily, then another time you won't apply to it. You won't stick with it. Yes, you can learn to use other people's systems and stick with it, well, especially with a mentor. But even after that, you need to find your way. Okay, so a lot of there's an old Chinese saying, knowledge in a book is dead. Somebody write it down through years, different generations, through their own experience. But when you apply it in real life, it could be quite different. And you need to understand that, how that works. For each one of us is quite different. Okay, so be aware of that. And the other thing is quite often that I said it all before. You look at the Ted Williams book as well. He has an emphasis on practice and practice and practice. Meaning he's thinking of, have you done your homework? Do you know what you're doing? Have you got a system? Have you got risk management? I mean, that's in trading in my view. Have you got a stop loss? Do you know your uncle point that at reach point? Do you say, I have enough, I have to get out, And what about your emotional strengths and weaknesses? Is there something that you can put in together that, prepare yourself mentally? And also what happened when you win, what happened when you lose, those kind of things. And you have to practice all of those and find your strengths and weaknesses. And this is important. Baseball, just like footballer, when they're not in the game, they go and practice. You just go, Ted Williams, just swing, and just try and have a better batting, style. And then when he find it, basically just continue to follow that movement to make it smoother, as easy to himself as possible. Just keep on practice. I presume if you've done it day and night, whenever he got free time, and to be successful, he don't need people telling him. He just probably carrying a bat and swing around a lot, and smooth hone his style, so to speak. So it's quite got to remember this. You need to practice and practice and practice. And the other thing is, for me anyway, I think this balls, the 70-cent balls, also brought out another point that for me anyway, I'm a very visual person, and I think I learn better by looking at graphs. So when I write things down for my trading journal and stuff, I also print out the curve, the graphs, the charts, then say this is where I get in, and then when I get out, I also mark it, say where I get out and so forth. So picture worth 1,000 words, and that this photo of Ted Williams and then the 70-cent balls by the within the square beside his, and then in a picture, to me is very useful, a vivid reminder of what your strength is. Yeah, and when you write things down, draw your pictures and stuff, it also tells as well. And over time, when you review it, it's useful. I mean, there's no saying in China, say, a picture is worth more than 1,000 words. I think Western countries have that view as well. And it's very useful, and for me particularly useful, and I think it's also helpful for you. But also the other thing for me anyway, not just pictures, also audios. This is why I use Audible. I get absorb that information better than reading. Some people are good at reading books. For me, it's more like visual, looking at things and writing things down, because it's sort of connect to my brain and listening. It's one thing I also do sometimes when I do journaling. Sometimes I'm too tired, I don't write things down. I do anything. Next day, what I do is I hit the record on my phone. I mean, most phones nowadays come with a recorder. You can record your voice, record your views, and then very, very quickly. And you carry that with you and just write things down later on. And just, sometimes audio, when it's really much more useful than writing things down, to me anyway. And let's say you're keeping track of your trade. Sometimes you don't have time, you can also do an audio format. That sort of thing. There's software out there that can convert words into audio back to word, that kind of thing. So you can use those words to help you, and then less time for you to write things down as well. So that's very useful. But always keep track of things, and to me anyway, audios is useful for me to listen to. And the other thing here is again on the Ted Williams diagram, and also what Warren Buffett said. I mean, he understands Coca-Cola and Bank of America. He didn't go into Amazon. He only lately tried Apple, but he's not very much a technology person, so he don't really go into there. So if you don't understand something, he don't go there. Okay? So that means for us as a trader, we don't have to trade everything that run in front of us or run past us. We don't be like a dog that's going to chase every car that passes in front of your house. If that's the case, then you wasting your bullets a lot of time, because a lot of those trades might not necessarily be a good trade, maybe mostly because the trade go past, it looks nice, it looks good to your eyes, or your charting performance before that the chart say do this, but your system, because we're trying to follow our system instead of the charts, the system said don't do anything. Okay, now I have this urge sometimes, I just want to trade because I see there's a pattern here, so I put it in a separate account which I talked about. But I know those ones, because discretionary trade, from my own experience, for my own self-competence or incompetence, I don't seems to make good money out of those. But I have that urge, and rather than just ignore that urge, which I have always something in the back of my mind say do this, I basically buy it. I go through or sell whatever the trigger point is with a discretionary point I think about, and then basically place a trade on it, but through a separate account, and have a much smaller trading size. So I normally just take one or two size, and that's it. I hardly period it up. So I won't ignore it. If I make money, good. And if that trade seems to turn out to be pretty well, then I use trend following to track of it to say, okay, that seems to be working, and I can then through my other systems, trend following system, I use that as well, and I can purchase some more, that kind of thing. But you don't necessarily have to always go and trade if your system say no, and you need to know when to hit, when not to hit. So it's just like a baseball. In that baseball card, the 7 balls, each one got a little figure. Some got smaller figure. I think that's batting average. Some are very high numbers. Then I think Ted just make it all red. So he knows which his circle of competence is. He will then basically say, okay, if there's a ball coming from lower left corner or something, he ignores it. He know he can probably hit it, but what's the point hitting it when out of order? From his own experience, most of the time he don't get a good hit or good connection, and not much of a home run, so to speak. He aim for the big thing, the easy thing, the good thing that he can comfortably take. And this is very similar to Jim Rogers was talking about. When he trade, he just basically like picking fruit from the tree. He see the fruit that hanging the lowest, and it's for him the easiest to reach. He just go there and pick the fruit and pull it, and that's it. Just put it in his pocket and just buy and eat it. He doesn't exert himself to climb on the top of the tree and do things. So same thing here. For Ted Williams, he only go and take a bat, hit the ball. If the ball comes from the from the pitcher, basically, he's sending the ball into this circle of competence, circle of area that he's good at. And then he knows that he can make a good connection between his ball and between the ball and his bat. So that is important. So you should need to know when to trade, when not to trade. And most of the time, people forget not trade is also a form of a strategy. Yeah, sometimes the market is not good, don't trade. There's no shame in it, but don't take up a trade. And it's just okay not to trade. Sometimes when the market is on your favor, or your systems didn't give you a signal, or you just have itchy fingers, and you just want to trade, and a lot of those times you have good experience or training experience, a lot of times those things don't turn out right. So it's better to, rather than hit every trade, be more selective and only follow what your system said. Even then, your system might, come up with the signal that might not necessarily make money. So what's the point? You spend all your money trying all our different trade that run in front of you. Be more selective. But this only as you get more mature as a trader, you realize that a lot more, and then you be cool, better, feel easier to just wait for a trade. For new traders, especially young guys and girls, it's kind of hard, but it's through experience and maturity over time, you're able to do that, and that's something that I'm afraid we all have to go through and learn. Do something important. Next, I learned the other thing is don't be afraid to fail. Apart from Ted Turner, I also read a bit about Babe Ruth. I mean, a lot of people say he's the greatest baseball player, but a lot of people keep on talking how great it is. Didn't talk about something which is not talked about much, is how much he gets strike out or gets struck off, so to speak, because he's missed the hit, so to speak. And does that mean he stopped to don't swing? He swing when it's time to go to the swing. His turn to do the swing. He swing, and he just got to hit the ball as much as he can, and just like Ted Turner, wait for his the best throw out the ball and things whatever, and then swing his bat, and that's just him. Okay, but he misses a lot. Babe Ruth misses a lot. So is Ted Williams, I believe. And a lot of people forget. You miss, so what? Go back in next time when you call to bat and continue. So same thing here. You fail on your trade, this current particular trade that you're doing right here, right now, fail, it's fine. Because your system doesn't know if it's going to be profitable or not, but you got a method to follow it. And I think that you need to remember that, and don't think every signal from your trading system is going to be a profitable one. Yeah, you need to remind yourself you have a process and you follow that process, and that process doesn't mean every trade will turn out to be a successful one. To us as a trader, turn out to be profitable. A lot of people, me included, when we first started trading, chasing the holy grail, that somehow we believe there is a system that never fails, that it always tells you when to turn and always get in the lowest and sell at the highest. You can do that sometimes, a couple of times, maybe a year or something, but not consistently. And a lot of time, you never get that chance. Maybe sometimes you get really big one, and that's like once a blue moon, maybe once a year, maybe once a couple of years or something. And that is it's not consistent. You cannot do that all the time, and it's not something that you should rely on. And but our brain always just remember, the last thing was so good and stuff, and also the failure as well. We remember how bad the failure is. But for trading, we need to understand that it's a probabilistic game. Recently, I did a tweet about people the feel about trading and winning and stuff, and I would like you to do this. Think of it. You have a coin, whatever coin is, whichever country you're from. Assume that coin is not a fair coin. Okay, that means if you flip 100 times or 1,000 times, you get 50% chance it's tail, 50% chance ahead. So let's say this coin is a loaded coin. It lands on heads 60% of the time, and 40% of the time it lands on tails. And providing you just continue flipping a coin, the same process, flip the coin 1,000 times, do it day in, day out, over time, you get, because it's a loaded coin, you get a high probability of getting 60% of heads than 40% tails. Okay, and that is the case for our trading system. We want to make it loaded, so have a positive edge. That means providing you do a lot of it, you will be able to get more money out of the market, but you end up with more heads than tails. So more positive, more trade that have more that give you more money from the market, so to speak. And for us, we also fudge this weighted loaded coin to our favor by, when we lose, we also cut out large losses. Okay, so that's why we have a stop loss. So any of this black swan thing that suddenly comes in and knock your sixes, you just get out and you don't let it continue to erode your trading account. So a black swan should be a little swan, but it can turn out to be a huge giant swan or a dinosaur, but it's going against you and take a big chunk out of your account, or maybe just destroy your account completely. And you don't want that to happen. So by limiting your losses, okay, you also put the loaded coin in your favor a bit more. So a combination of a system plus your risk management can help you to have a better positive edge, overall system that you can use. And therefore, in the sense of flipping a coin, instead of a what you call 60% head, 40% tail, you now change it to maybe 65 or 7% heads and 35% of tails. Okay, and that's important. Okay, so you just need to keep on doing it. Okay, and remember, you have to keep on flipping the coin. So that means you can have lots of tails too, and different pattern of tails, which in this case tails to me means in this example is failures, losses. Head is winning trade, tail is losing trade. Okay, and we need to remember that. And a lot of time I tell my friends, also my eldest son who tried to learn about trading, so go flip a coin, flip any coin 100 times per day, and keep track of what the result was, how often is how many heads and tails you get, how often you get strings of heads, strings of tails, what are the patterns and things. I look at the patterns, today's pattern same as yesterday pattern or last week pattern, it was same as next month's pattern. And you look at a spot very much random, but yeah, you do have strings of wins and losses, strings of heads, strings of tails, but you can never tell how much, how long is a string, and how often it's happening. And this is what get us a lot because we are not basically taught to handle probability, fluid, random market, and so this is something that is useful to remind yourself flipping a coin how things works. So don't be afraid to fail. Your system say go in, just go in. Don't be afraid to fail. The other thing is on that one, you fail if you don't watch out your risk management. You fail to pull the trigger. So next time when the system comes, when the system's signal comes, you won't pull the trigger because you got scared. Okay, and same thing about baseball as far as I understand. Like Bayreuth, he got struck out a lot. He misses his strike a lot. Okay, but does he get pissed off so much that he won't go back out next time when it's his turn? No, when it's turn, he just go by and swing at it. He just keep on swinging at it. I'm sure Ted Williams do the same thing. Just swing at it. They will not stop. Okay, so for us as trader, we shouldn't stop just because maybe we have a very bad experience in the previous trade. It will say loss, even a small loss. You don't feel like it, you don't feel right, and don't want to follow your system and pull the trigger, next trigger when the next system signals comes. That kind of thing. So always take every signal from your system. Keep on trading it, and because one thing, I don't know what happened tomorrow. I don't know what happened next minute or next second. So how do I expect the system to know? Because the system is not God. It's just basically based on a set of inputs, and then it comes a set of outputs, and we trade on those outputs. Okay, and our input is end of day data. For my style trend following, use my system. I use end of day data, and that's it. And how do you know? Next trade is going to be a winner or loser? It doesn't know. The methodology is based on mathematics. It doesn't know. It's going to be a good positive outcome or negative outcome. You never know, but you need to take every trade, every one, okay, from your system. Otherwise, when what you hate to happen is because you don't know which one will be a winner, and you say last 7 times was a loser, so there's high probability next try will be a losses as well. You can think that way, and you basically say, I'm not going to trade. I lost 7 times. I give up. I got hurt a lot. My account got down to quite a lot, and I don't like not doing that, and that is not very good, and you must follow and continue. Okay. The next things, but not last but not least, is try to be smarter. You need to be smart about what you're doing. You need to think what you're doing. That is, you must have a plan. You must follow it through with proper thinking. All the thinking for training, anyways, is done beforehand. And Ted Williams talks about in his book, whoever the pitcher who's throwing the ball, and basically you need to know, study the team that you play against, and then who is throwing the ball, and then see his style. And over time, because you probably meet this, especially in competition, you meet that person a lot. You seem to understand the type of person that will throw the balls at you, and you learn about it, and you be smart about it, and do your homework, so to speak. So you know your strike zone, you know your stand, you know your proper moves and stuff, and you prepare yourself for it. Okay, you know when to trade the trigger and just pull the trigger. It doesn't matter, just continue to pull the trigger. Okay, and also if it, like I said before, if your signal, whatever it is, if it's not following your system, let's say you do like what I do sometimes, discretionary trade, and it's not going to make good, might not have a good outcome. Don't trade. You don't have to take that signal. Yeah. So same as Ted Turner and Ted Williams here and Babe Ruth. They miss out, but they still keep on continue and just swing at it. Okay, and then this competence, circle competence, as far as I understand, is very important, and I think all of us should learn about it and use it. So this is basically my 2 cents worth. I think I raised about 8 points in here, and I think it's very useful. And I hope you like this. You like this podcast, and you check out the links, the one on the YouTube, one to the book, and read about this book from Ted Williams, Science of Hitting. I think for Americans, a lot of people are baseball fans. I don't think it'll be too much of a surprise about Ted Williams, and probably some of you have read his book, but I think it definitely you need to read it. You haven't read it before, and it's very useful for your training. I guarantee it. Just go and read it, and I hope you benefit from it. And this is the end of my podcast, and I speak to you next time. And if you like this podcast, please tell your friends and ask them to listen and subscribe to my podcast as well. Thank you, and I'll speak to you next week. Bye for now.